Okay, so we are going to start with a bit of a relative performance. What we're looking at here is the indexed year-to-date performance versus the USD here in orange, and then we have versus gold here in the yellow. Now, why do we do this? Well, gold is essentially the old school store of value. It's what many investors would generally move towards if they're looking for that kind of sound money allocation. And what we can see is that they're more or less the same chart because in many ways, gold's volatility is substantially lower. Now, why particularly did we choose gold this week? Well, gold actually punched out to a new all-time high for a very, very brief period of time, getting up about 2,150 on the USD. So that is now an all-time high across every fiat currency. But just putting things into a bit of perspective, Bitcoin is up over 140% versus the US dollar this year. And it's up over 100%. So it has more than doubled versus gold over the course of this year. And in many ways, this is, we've been talking about over recent weeks, this kind of institutional side. The more that institutions start to look into Bitcoin, the more we start to see these larger transaction volumes moving around the network. We're seeing this institutional adoption slowly starting to grow. And in many ways, Bitcoin is in a bit of competition with gold for that sound money allocation. And I think most people looking at this problem probably don't expect it to be immediate. It's going to be one of these slow marches where Bitcoin may start as a small percentage allocation and it slowly grows, or in this case, very quickly grows, depending on how the market performs. But as these ETF vehicles start to come to market, these kind of things start to make a lot more sense because at the end of the day, everything in investing is a relative game. And that's really what we're going to be looking at here is a bit of this relative performance, because that is in many ways what matters in the sense of opportunity cost.